Money FM 89.3, best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to U.S. Markets Wrap with me, Ryan Huang. And we've got some red on the screen as stocks fell, with investors looking ahead to the Nvidia earnings later in the week. The tech-heavy Nasdaq down 0.2%. The broad S&P 500 index lower by 0.4%, and the Dow Jones Industrial Average closed down around 350 points to 45,282, which is 0.8% lower. So let's take a look at what is playing out in the markets with Michele Schneider. She is the Chief Strategist for MarketGauge Group. Michele, thanks for joining us on the show. How are you doing today?
I'm great, Ryan. How are you?
I'm doing great as well. So let's dive into what's been moving markets. And it seems like among the headlines, Donald Trump, again, helping markets move along. And the latest comes from what he's been doing, at least his administration is doing, with their interest in Intel. So that's a 10% stake they've taken in the chipmaker. And that seems to be paving the way potentially for more similar deals to be done. What do you take away from this latest development, and what can you expect perhaps in the coming months in terms of similar action?
Well, just going from big picture, controversy and the Trump administration are friends. No. And so, of course, this action does little to squelch the controversial acts that he's been doing. So I did a little bit of history, and the only time in recent history where the government got involved like that in taking an actual stake was during the financial crisis of 2008-2009, where they bought interest in a lot of the banks. So that was a very specific purpose at that time. And he's already, at this point, Trump, has done things like taking the golden share in U.S. Steel, right, with the Japan's Nippon Steel. He negotiated with Nvidia to get a 15% cut of the chip makers' revenue from China. He's done the same thing with AMD and the same thing even with Apple, where he said basically, I won't tariff you if you put money back into the United States. So from the idealistic standpoint, the deal with Intel and all the others are all geared trying to reshore companies back into the U.S. to build in the U.S. So that's the rose-colored glasses view. The fear, of course, is that, A, are we into a slippery slope, almost like a state-sponsored capitalism that we see in China, where governments get involved in private business, and he certainly has been vocal about how he feels about certain businesses. Like today, he basically denounced wind energy, and that sent a couple of stocks falling tremendously, even here in the United States, a wind farm off of Maryland. So my point is that what this does now is, it's one thing when the U.S. was taking a share in through the CHIPS Act as a grant. That could be very positive for Intel and building jobs. But now basically what he's done is that although it doesn't increase the national debt, it makes the taxpayers now involved in this company, and it uses government funds through borrowing. So, you have to now hope that Intel stock doesn't fall apart, or it costs the taxpayers money, and instead of diminishing the spending and the debt, it actually increases it. So it's a bit of a gamble.
Yeah, so it's a very interesting balancing act, but I could also argue perhaps that the administration backing many of these private companies could help to lift markets, especially when we talk about this being part of a broader strategy to create a sovereign wealth fund. So there could be more investments to come, and in that sense, more upside for S&P 500. Is that likely to play out in terms of providing more tailwinds for the risk appetite that we're seeing right now?
Well, again, it's going to be whether or not the perception is that having the government involved in this sovereign wealth is going to be a successful business plan to A, reshore, which is the main thing, of course, B, counteract tariffs by adding more money into the government, and then C, involving the public taxpayer to make a profit from a company they're not necessarily involved with. And I don't know if I can tell you the answer to that question. I can say from a price action, considering this all came out today, all we saw was a little bit of a pause in the action after Friday's spectacular run-up after Powell spoke. So we don't really know yet whether or not this is going to be one of Trump's successful business plans or if this is going to be trouble later. What we are concerned about, I think, many people, is how far-reaching the grasp of this administration has become in all areas of the government, now not just with the sovereign wealth, but, with some things like military action in certain cities to control crime and tariffs, the threat today of, on the magnets, 200% tariffs back on China, furniture tariffs, shutting down all pharmaceutical ads. This is, I think, where people start to get nervous. Does that affect the stock market? At this point, I have to say the answer is no. The only thing I think that will affect the stock market at this point is if inflation starts to go out of control, and we're seeing hints of it, but certainly nothing confirmed.
All right, talking about things on spectacular runs, Nvidia definitely part of the conversation. Year to date, up 30%, and in the past year, 42%, and in the past 5 years, over 1,200%. Where does this sit in your portfolio? How are you feeling about it, especially as we head into their next report card?
Well, again, let's go back to what we said. So Trump actually took a 15% cut of their revenue from the chips that they sell to China. So now you have an administration that has a benefit for seeing Nvidia grow. Now, today a report came out from Wells Fargo. They're raising both the revenue estimates generally in the company and also from data center revenue by $3 billion because of the strong interquarter demand and the H20 approval. So right now it looks to me like the upgrades are coming in. People are expecting Nvidia to do well. It's Wednesday afternoon here in the States. The implied volatility, which means how much they expect the stock to move post-earnings, is either up or down about 7%. And as you know, Ryan, it's always not about what happens at the earnings, the actual report, but what is said in terms of the forward guidance. And at this point, we don't see any reason why we should see Jensen Huang say anything negative about forward guidance. I mean, Nvidia is the chip. It's the chip of the world.
Yep, so high expectations perhaps, but they somehow always manage to beat it, at least in the past few quarters. Something else that's in your portfolio, Novo Nordisk, the folks behind the blockbuster Wegovy drug, the weight loss drug. What is your position on it right now? And of course, this is in the midst of various headlines, many of them negative, falling prices, competition, disappointing earnings, change in CEO recently. What is your view on where it's going?
Well, Ryan, I actually love when something like this happens, as long as I'm actually not in the stock, which I'm not right now, because once all the bad news gets into the market, when you have a company as fundamentally strong as Novo Nordisk, involved with something that because I've talked about this with you on the air, the whole vanity drug, the idea of these obesity drugs going more and more mainstream as time goes on, then I think that you'll get to a point where this will be a great buy opportunity. Now, we know it has major competition right now with Eli Lilly. There's been supply concerns. There was just a change of CEO. But I wouldn't discount this. I mean, while Eli Lilly has a couple of really strong products right now, obviously Mounjaro being one, and Wegovy is what Novo has, I think that we have to give this time for that company to get its act together to be able to be price-wise competitive. It will have a place. If it gets back down to $50, I would probably look to be a buyer there. Or if the bad news is in and it digests, it gets back over $64 a share, I think that could be another really good opportunity. So I think this is a good thing. It's like what's happened to so many companies in the past. The bad news all goes away, and then you get a good company with solid fundamentals, and it becomes a great buy opportunity.
All right, lots to watch out for when it comes to Novo Nordisk, Nvidia, and of course what the U.S. government is going to be doing when it comes to taking perhaps more interest in the private sector and more stakes, perhaps. And we've been in conversation with Michele Schneider. She is the Chief Strategist for MarketGauge Group. Michele, always great having you on the show. Thank you so much for your time and insights.
Thank you so much for having me, Ryan. You have a great day.
You too. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.